Jamie, Steve, take it away.
What is going on, Scott? Hey, Steve, how you doing on this fine Monday?
I'm doing swell, thank you.
Just swell. Quite a Monday it was, and welcome everyone to another edition of the Office Hours. Today's Monday, and we are in a new month of December. Santa Claus will be coming soon, boys and girls. You better be good. Um, Christmas is going to be coming in more ways than one, probably a little bit later. Christmas might extend all the way through January as far as we're concerned, and the things we have coming down the developmental pipeline, ooh, can't wait, can't wait. Going to be good. All right, so once again, welcome everyone. Before we get into the good stuff, just want to take a moment to make the lawyers happy. And I'm sure most of you are already aware, but for the newcomers, everything that we share with you in this webinar, and whether it's this one or in any of the other ones that we host throughout the week, we're sharing all this information with you for educational purposes only. If you do need investment advice, what to do, when to do it, all that good stuff, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker that is licensed to legally give you that type of advice. Okay, I think that'll get it done. And for the regular attendees, bear with us here. We always like to give the new people an idea of what we have going on here, other than the award-winning, one-of-a-kind technology with AI. We've built quite the community around the technology, which is very important. It kind of all starts with Barry's Trading Room, hosted by Mr. Barry Anderson. He opens the room up about 30 minutes before the open each and every day, and quite a few people in there sharing ideas. Could be 400, 500, 600, depending on the day. But Barry does a fantastic job at moderating a room of that size, showcasing his trading style, while at the same time showcasing how he uses TI technology with AI and all of his independent windows that he likes. So if you haven't been taking advantage of the trading room, you can't beat the price, which is free. If you've shopped around online and looked at different trading rooms, you know that most of them are not free. And, you know, as far as quality goes, some good ones and some not so good ones. But here we have a high caliber trading room, and there's no charge. So take advantage of that resource. It's also a great place to go if you're just getting started and, need a room to teach you the ropes, do a little mentoring, whatnot. Of course, today you get myself and Steve office hours for the 5 p.m. webinars. Steve gets the steering wheel tomorrow with the trade of the week. Andy Lindelof is going to ride shotgun with him. And then comes hump day, Wednesdays. I'd like to change it up just a little bit, bring in Dan Merkin, the founder and CEO of Trade Ideas, along with our Chief Technical Officer, Mr. Brad Williams. Always interesting to hear what those guys have to say. For the 5 p.m. Easterns, we're going to round that out on Thursday. Andy's going to round it out with the Trading Studio, and I ride shotgun with him. And, of course, the ever-popular, ever-growing Friday support session. I think we might have had a record crowd in there last Friday. It's where you can come and basically get anything TI-related addressed. And you got myself, Steve, Andy, and Sean in there typically, so 4 heads are better than 1. So come one, come all to the Friday support session starting at 11 a.m. Eastern and usually going the full gambit till about 2 p.m. Eastern. In addition to the 5 p.m. Eastern webinars, we have the TI University starting on Monday with Beginners 101, Tuesday, Wednesday, and Thursday up to 401. I happen to teach the 401 class. Myself, Steve, Andy, and Sean all teach one of these. So we do recommend that you take these in order. You'll need the knowledge gained in 101 to pile on top of 201, so forth and so on. So you can sign up for all of these webinars, plus the 4 5 p.m. Eastern webinars. Throw on the Friday webinar, and we've got a total of 9 webinars that we're hosting each and every week. So lots of different resources, lots of skill levels, everything from beginner to advanced. So take advantage of these resources. It will help you get over that learning curve sooner than later, which is always a good thing. Now, AI introduced 2016 with the very first Holly 1.0. which we'll take a look at a few of her trades today, along with 2.0 and Neo. But just like to throw this graph up here to show you how people have been responding, what's been happening to our user base since we introduced AI and continue to improve upon it. Well, you can see right here, we're getting lots and lots of new subscribers, and this chart probably needs to be a little updated, but the path continues in an upward fashion. And now, on to today's agenda. So, of course, here we are at the top here, market recap, trade wars, gap ups, all this good stuff going on. We're good as a relative term there. All this interesting stuff, I should say, is going on. So, Steve, I guess that's your cue. You ready?
Yeah, I'm just typing away over here, so whenever.
All right.
The market is closed, guys, on Wednesday, so there's probably going to be no webinar on Wednesday.
This is true, and thanks for pointing that out.
And somebody else was having trouble getting into our class earlier this morning, so I dropped in. Matter of fact, I should drop that in for everybody in the chat window. The playlist for the Trade Ideas University. Bear with me. All right, in the chat window is a playlist for all the recorded versions that you would normally see, which is a good point because Wednesday will also not be having the Trade Ideas University 301, so you have to use that recorded version as a substitute. All right, so good enough. Welcome to my desktop over here. Let me organize a few things, get my little drawing pencil. So here we are, SPY for the S&P 500. A pretty good week last week and a pretty good day today, coming off a pretty good gap up over the weekend. Gap ups are hard a lot of times for day traders, and they're always welcome if you're long holding positions and took the risk going into the weekend. But I'm starting to see a tip of the scale back to some neutral. And I know I was kind of bearish the last couple of weeks, and rightfully so, because what I was seeing was this, and then a bounce, and then down into this. But we did not get that. We got a holding of the base, which now starts to beg the question, are we looking here at a double bottom? Now, a double bottom coming off of a 10% correction, correction is what the word is used to describe something of a 10% pullback, and that's what we got in our markets. So now, the way this is shaping up after a really nice bounce, we did not, again, I talked about last week, some moving averages, some pivot levels in orange, more moving averages. The price action, regardless of what volume did, the price action just plowed its way through. Boom, 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 congestion, boom, gap up. So here we are today. But before I zoom in a little bit, I want to show something. This could start to become the discussion. Did we just have a nice 10% correction and a nice double bottom here bounce on the pullback to build, yet a higher base camp on the bigger picture of the trend that we've been in? It's quite possible, but we're going to need to see a little bit of consolidation and sideways action. I'd like to see some sideways action above the 50 period moving average and above the 200-day moving average, which we in fact closed on. But notice what we got hung up on. We got hung up on that orange line that I've had in there forever. It's a pivot line that goes back to this gap and support here and resistance here and resistance here. So we opened up today and we couldn't get above that level. So that is now going to become the new level of interest. But just as it were, all of this trail of hurdles that the bulls had to get across and get over have been successfully accomplished. These moving averages, again, these pivot lines. So what's going to happen going forward? One more thought I had today was on the SPY and the candle. If we look at the intraday action here, just to sneak into it, it's a nice little intraday gap up and a nice little saucer. That's very bullish on a 15-minute chart. Any day of the week, I will say that. But in the bigger picture, it looks like what we would call, get rid of that, this little bottoming tail candle right there. If I zoom in a little bit better here, I might be able to try something. So let me try something there. Perfect. So if we didn't have this candle today butting up against that level, and we had the opposite, I'll go ahead and draw what that opposite might have looked like. If we'd have had a candle where we gapped up and then we finished the day looking something like this, my artistic skills are going to come in. That would have not been cool. That would have been okay, that's an exhaustive move after what we just had off of this bounce. But we didn't get that today. We got something a bit stronger. We got the full on, I got to go to my cursor. We got the full on bottoming tail. Again, as shown in the intraday gap up, filling the gap and then finding a base midway through the gap and starting to turn back forward. This is a very constructive candle that we could quite possibly build on. Same thing happening over here in the Qs. You know, a nice bottoming candle. And this one's even more significant, guys. This was that death cross that some people laugh at, but institutions talk about. The 50-period moving average is just about crossing the 200 moving average today as we speak. And if we want to get technical about it, that candle did not close above the 200 or the 50. So it still has a close below. But on the good side, the candle has something constructive to it. I'll do it again, what I did before. Get rid of that. And I'll come in and mark what would have been a horrible looking day, would have been to gap up and close with something like this. That would have not been very cool with that topping tail. So back to, you know, the affirmation that not a bad close in terms of individual candles. I try not to get hung up on individual candles, but they still creep into the metrics when you're looking for the bigger picture. So both the NASDAQ and the Q have some work to do. What work is that? The work is to stay above and these respective areas. Some sideways consolidation might be nice. You know, it's quite possible. Some sideways consolidation could develop into something bigger. The IWM this morning was rather curious. It had a really, look at that bottoming tail on this thing. And then when we look at the intraday, a lot of people were talking intraday like, ooh, is this going to be an ugly day? Because the Russell 2000 wants nothing to do with the gap up we had. There's the gap up and it did nothing but sell for, you know, 2.5 hours straight before it found some support. And then this is what, you know, at the end of the day, when you have a intraday support, like intraday candle action like that, this is what it's going to look like on the daily picture. So those bottoming tails can be constructive when you put them in context there. So same thing here, could be a possible double bottom. We'll see. But the fact that we did not follow through to lower prices last week, we continued to move higher and blast through the respective walls of resistance that were being put up in front of it, and those hurdles were all cleared. Back to kind of a neutral stance here. And just to finish off, you know, the thought, there's nothing wrong with going back to a neutral stance when we look at what we've been through. We've been through a 10% correction, and we have what could possibly be a very solid footing, a foundation of a double bottom after a nice 10% correction. That's kind of textbook market action. So we'll see. We need to get these next few days. Sideways action would be ideal, then a possible move higher. We'll see. But I'm back to kind of a neutral stance. The market's back in a show me mode. It's done what was asked, everything that was asked of it last week. Let's see if it's got some more staying power and if it can hold up here. Now, you know, not to get too much on the news. I like to look at the price action over the news, but yeah, it was a global China trade deal over the weekend that gave us the big gap up. Okay, let's see if that can hold. It was also a lot of dovish talk coming from the Federal Reserve, keeping interest rates probably low for more of a longer time frame than people thought or the market thought. But those are two catalysts that could digest into higher markets. And look at this. Yeah, this was a 10% correction in hindsight, but we won't know that until we get the price action to confirm it. We can sit here and speculate all we want, but I'd rather focus on what the price action is doing. And if we can see 2, 3, or 4 days of nice sideways action without giving back too much in price, that could be very constructive. So we'll see what happens. That's pretty much all that I saw today. Jamie?
Good stuff, Steve. Good stuff. Let me grab it back from you. We'll get into the nitty gritty here because, you know, seeing this big gap like this, what does it do to most traders out there? You were all like, yeah, you know, kind of hesitant to go long or jump right in on the open. And of course, you can see we did take a little bit of a pullback, you know, covered up about half the gap before heading higher. But as Steve pointed out on the charts there, textbook, right? Could be the end of a textbook 10% correction and off to the races. Kind of reminds me of the old movies. There's been several of them where, you know, the plane loses power, everybody's freaking out, instrumentation panel goes dim, but at the last moment pilot's able to pull it back out. Power is restored. The lights start to light back up on the dashboard. Interestingly enough, a lot of my tickers that were just pretty much dead during this time period right here, a lot of them are starting to come back to life, like that instrument panel on the airplane pulling out of that nosedive. So we'll see. Time will tell. Market action for the rest of the week. We got, well, the anomaly. Wednesday, the market's closed due to the presidential death of, or the ex-president George Bush passing away. So they're going to close the market on Wednesday. So we still got Tuesday, Thursday, and Friday to see what happens here. You know, do we get up above here and have a few closes? Maybe, maybe not. We'll see. We've all got front row seats, first class, you might say. Yeah, Prakash, we're going to go over, I saw a question come in there. It's like, what are we seeing here? Well, what you got right here, you got a couple of my charts. You got a daily over here. You've got an intraday chart over here. And here I have all of the different AI modules pulled up. These are the blotters for each one of the AI modules. Holly Grail, Holly 2.0, and Holly Neo over here. So what we're going to do first here is we're going to go over the Holly recap. We're going to talk about how Holly performed from a cumulative standpoint. We're also going to point out some trades and go over what we like to call risk on and risk off mode and how we can participate with Holly when she exits a trade, how we can decide based on the chart pattern. If we like what's going on there, we can stay in the trade when the AI is exiting and hope to make more than the AI. So I've got them all mapped out right here. Got three good examples here. Now, before we go into the risk-on trades from each one of the modules, just kind of want to point out as I drag I've got my strategy panel down here, kind of shrunk up, but I wanted to point out the yield curves here. Right here we have Holly Grail, which was the smallest performer today. Ended up being up 57 cents on 10 trades executed. So if we take a peek at the risk-on equity curve here, underwater for a good portion of the open, getting down to just a little over, not quite a $1.30, or not quite a $1.34, while she piled into her positions. And it took a little bit of time for her to get any traction and get above this zero line, where cumulative positions were in a positive mode. Now, if I right-click and switch my segment over to 2.0, we can see this yield curve a lot smoother. We got a little pop right off the bat because the sunrise mover strategy got active right off the bat this morning. Thus the name sunrise mover. It's going to be one of the earlier strategies to kick out trades if those trades trigger. But then little downturn, which is common a lot of the times when the AIs are piling into positions right off the bat on the open. Got underwater a little bit, and then boom, got back to the zero line and then off to the races. But it was really Neo that had the biggest move today and pretty much the smallest drawdown, getting positive right off the bat, getting back to that zero line a little bit underneath, and then whoosh as the day progressed. And a lot of these positions caught traction. A nice gain from Neo today, finishing at 301 on 16 trades, as we can see from the channel bar up here. So cumulatively, between all of the AI modules, Neo, 2.0, and 1.0, we finished at 4.13 points on 46 trades or signals. Now, we could also say little right at 9 cents a share, which isn't the biggest day that we've seen. It's nothing to write home about. Usually on a day where we say the AI just pretty much crushed it, that could be in the 20 cents, 25 cents. A while back during the downturn on the short side, one day we had 44 cents a share average traded. But today, just coming in right about 9 cents a share. Nothing to write home about, but some really good trades respond from the AI today. And if we get in the mode of assessing these trades and sizing up the charts, there was some nice risk-on money that could have been gleaned. So let's take a look at a few risk-on candidates today. Well, let's save Neo for the last here. We'll take a look at Cree from 1.0 first. Now keep in mind each one of these strategies is a different module. Holy Grail up here, we can see the 10 trades. This one right here, CRE, the first risk on trade. Now, once again, for those of you who are new out there, risk off, risk on, showing you what happens in risk on mode if we stay in all the positions, not using a stop loss or a profit target, just buying and holding. Risk off is simply the AI obeying its rule set, just like you or I would. If we are wrong, we've got a stop loss in place. That's what we're willing to lose if we're wrong on the trade. As far as Holly goes, she typically has a stop loss and a timed hold. Some strategies have a profit target, some do not. And then she's got a couple of reasons that she can get out of a trade early, whether it's a winner or a loser. I like to call those audibles that she can call in the form of profit save or reduce risk. So those are the 5 reasons why Holly will get out of a trade in risk off mode. Now, if risk on is simply holding indefinitely throughout the day, why would we want to hold something that Holly's getting out of, right? So let's take a look at this CRE trade right here. And if you're seeing this for the very first time, when we click on the AI blotter here, all of this information is put onto the chart for us. We've got the blue line right here indicating where the AI called to get long in CRE. We've got our stop loss clearly identifiable by the red box in the right margin, red line extending out. And then if there is a profit target, we will see it up here so we can see the profit target is the green box right over here. Now, Holly calls the trade right here, and what happens? Well, a lot of the times these things will go right off the bat, which is always nice. Sometimes they'll throw a little bit of a wiggle, and sometimes they'll do exactly what we see here. We also take a look at why Holly got out, reduce risk. So she gets into the trade, and the trade does what exactly? It just kind of flops around at break even, hugging, kind of pivoting in and out of this entry line right here. Hey, we're down a little bit, slightly up a little bit back here. Kind of got close to the stop, but never triggered, which is always a good thing. But the bottom line is this: the longer the AI is in a trade and it's not going in the direction that it's supposed to, the more likely it is to close it out prematurely. Take note of the shaded area on this CRE chart. This is also corresponding with the time that Holly was in the trade in risk off mode. So she pulls the plug on it because it's not going up, right? It's going sideways. This is not necessarily a bad thing from when we're trying to size up the chart and figure out if we want to exit with the AI or if we think we might want to stay in the trade. Now, of course, we've got statistical probability on our side from the beginning, pushing through resistance on 1.0. If I switch back to that module, what were our odds pushing through resistance right here? 61.2%. Anything coming through that strategy had a 61.2% chance of working. Of course, timing plays a part here. So Holly and her timing on the exit wasn't really that ideal, but we've still got this statistical probability, and it's important to point out that it's good for the day. Sometimes the timing is there, sometimes it's a little off. Now the good news with this one is we didn't hit a stop. So when we see Holly exiting here, we can make the decision if we like what's going on the chart, obviously, and go, all right, I think I'm going to stay in this one. I don't really feel the need to exit. We tempted our stop loss right here and haven't come, close to that area in the interim. So my eyes are drawn to a couple of different things. This level right here and this nice little consolidation area that it's putting in right here. Matter of fact, this is a very popular pattern. I like it. A lot of other people out there like it. Number one, for its simplicity and its ease. It's easy to identify, right? So we've got statistical probability, and then we've got a little consolidation area. Well, you saw it as drew the line right there from the prior high. So when I see these types of plays unfolding, what I'm thinking about is, all right, well, we're still in the trade. We're not stopped out. And by the way, if it continues to go sideways like this, at some point in time, it might go test this area up here and try to break out of this little range. And we can see not too long after Holly exits, maybe 1, 2, 3, 4, a little over an hour, right at the close of this bar, sure enough, it did break that plane. It did experience a range break. Now, of course, I like to pay attention to volume levels as well. Volume is not the holy grail, but it can be the great equalizer when we're already attuned to something like this. So if we're in 100 with Holly right here, we decide to go risk on, this would be an excellent place to leverage that position as this range is being broken. Now, adding to a position and leveraging it on top of a pattern that we're familiar with, that was brought to our attention by statistics in the first place, there's not really anywhere you can see that type of output on these charts. But we can play this game. We've got risk off here, we've got risk on, and notice there's a spread here between -20 and $1.02. There's a lot of room in there. $1.02 plus an additional 20 cents, $1.22 of spread between risk off and risk on. So whether we just kept our original lot and kept our break even, or excuse me, our hard-coded stop, or whether we were able to identify this and leverage that position and get some of that risk on money, which is what you see here. This corresponds with the spread that you're seeing between risk off and risk on. So once again, Holly's strong suit, her superpower, so to speak, is bringing us statistically weighted plays and working in conjunction with her and seeing this time and time again. For you regular attendees, you've seen this before. We've all seen this before many, many times. And the more time you spend with the AI, the quicker you'll be to identify these things and take advantage of them in the future. So that's the first risk on. Now let's take a look at NTRI from 2.0, which was a short sell. Betting the stock goes down as opposed to up. So what a very nice entry up here. Pretty much not quite the high of the day, but pretty close to it. Let me shrink this up just a little bit so we can easily see our stop up here. Not a bad entry, we get a little sideways action as well, and then some nice movement in the direction. So not a bad exit from Holly. 74 cents, well played. Why did she exit? Well, profit target never got hit. Stop loss was never even close to being hit. This one lasted the duration, a timed exit. Putting on the brakes, NTRI. Let's take a look. Go back to 2.0 here. Putting on the brakes, anything coming out of that one had a 60.5% chance of working today. Only spit out the one NTRI. Of course, it winning trade there, so that's why we're seeing 100%. NTRI, a little bit of risk on left. So we see Holly getting out right here. Now this one's just pretty much working, going straight down. Now we can always get a little bit of an idea of where it might stop. And how would we do that? By taking a peek over here at the daily. And we can see when this one did bottom out, we're just kind of butting up against the prior day's wick, corresponding with all these candle bodies from this time period back, getting into kind of the middle part of November. So acting as a level of support, and we can see that's pretty much where this one petered out today. So this one was just straight down. We could have timed it a little bit more, got a little bit more of a move there, and then we just had this flat action with a little bit of capitulation at the bottom there. But once again, this one running out of room, getting down to that support level there. So that's a good example of a short. Not a whole lot of spread there. What do we got? An extra 26 plus 15, a little 40-something cents there that we could have plucked out. Not near as big as what we saw up here. But hey, if you can improve your trades by a nickel, 4 cents, a dime, a quarter, over time, that really does add up the more shares you trade. All right, Brandon, well, I'm glad I answered your question accidentally there. So let's take a look now at APLS from NEO, which by far and away was the prettiest risk on trade today. And of course, not to steal Steve's thunder. But how do you like that? Not to steal your thunder from the tweet that you made earlier. Remember what we were laughing about?
Right.
How you like them apples?
Yeah, great entry.
Okay, so what do we got going on here? We got Holly making a entry right here corresponding with the blue line at 1664. And boom, as soon as this trade is entered, click, 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 off to the races. Once again, let's pretend that this part of the chart has not evolved yet. Let's pretend we're seeing it, in real time. We've got the statistical probability here. What we've also got is the perfect hugging, these candles hugging this green line here. Now, this is the 10-period SMA, which is also one of the things that Steve brought to my attention quite some time ago. And since I've started watching more 15-minute candles, man, I love this 10-period SMA. Notice it's the guiding hand here. Notice that that's exactly where the signal came out from Holly. We get the push up. Where do my eyes gravitate to? Very similar to what we saw in the CRE. All right, statistical probability, perfectly balancing on the 10-period SMA. Love it, times 2. And then if it comes back up here and breaks this plane, might be a great time to add to this position. Okay, well, I know that volume is going to play a part when it gets over here as to whether it might just pop barely out of here and fold back over, or whether it might get some traction and keep going. All right. Well, we can see, what did APLS finish relative volume today? 2.97, roughly a 3x of what it normally trades. And of course, relative volume was high at that time as well. So when you can start stacking these things on top of plays that Holly brings out, we know that we've got statistical probability on our side. We can start folding in a little bit of pattern recognition on top of that as to what might happen down the road. And when we see these things play out, these are great times to add to a winning position, which is really one of the harder concepts for a newer trader to grasp. Because, hey, we're winning. We don't want to mess the trade up, or, I'm already up X amount of cents in this trade. Why would I want to start tacking on more shares, right? Add to your winners. You've heard that probably many times, but it's knowing when to add to the winners that's key. And here you've got statistical probability coupled with pattern recognition, and you got the added bonus of everything staying above the 10-period SMA here. So I hope that makes sense, risk off and risk on, because I always like to say it's not something that you pick at the beginning of the day, right? It's something that you address on a trade by trade basis there. So that's pretty much the three risk on candidates that I had picked out to talk about today. Sometimes there are some what we like to call trade arounds, things that stopped out that eventually got some traction and went back up. But it seemed like today the stop outs were working. They were keeping us out of trouble. A lot of these stop outs were heading lower today before the market swooned back up. But nonetheless, some good risk on activity from Holly. Now, what I was saying earlier about some things lighting back up, the engine lights coming back on the airplane, everybody taking a big deep breath, the instrumentation panel lighting back up. Well, I've got a couple of windows that maybe some of you remember last Monday's webinar where I was like, man, turbo up, no resistance, dead. Turbo down, no support, dead. We were just in this no man's land back in the market where you just weren't getting anything coming through there. Well, that's all kind of changing today. I want to pull over one of my favorite top lists, which is called pack leaders, right? Only thing, the main requirement for a stock to pop up on this list is it has to be hitting all-time highs. Well, this thing was pretty dead not too long ago, and I was surprised to see this many stocks lighting back up on it today. All right, so obviously there's a party where these stocks, there's a party here. They're hitting all-time highs, and they're doing it with, not so paltry volume, right? And we're not even back out of the woods technically yet until we get a couple of closes above that area that Steve was pointing out earlier. So don't know what's going to happen, but if this window's any idea, maybe this is giving us a peek into what might happen. We're already starting to see a lot of stocks at all-time highs again. Now this window right here, one of my favorite windows, turbo up, no resistance. Once again, has to be at all-time highs to even make it on here. If we start clicking through these alerts and looking at the daily, well, you can see all-time highs. All-time highs. This thing's lighting back up like a Christmas tree again. Now, hold on one quick second here. I got my window covered up here. So we're starting to see things like this come through again. ESTC. We're going to go back to that simple range break, right? ESTC. Looks like ESTC is not very old. Probably an IPO from back here. But look what's happening. It's breaking out. Look at the signal that we had right here coming through at 9:44 Central Standard Time. 15-minute candles. We get a little gap up. We get this sideways action. We get the penetration through the opening range break and off to the races, right? Hey, similar pattern to some of the things that Holly pointed out. They weren't complete yet, but she brought them to us with statistical probability, and then we could extrapolate what might happen if this level gets broken. Whereas with these windows here, turbo up, no resistance, why do I like them? Well, once again, going back to the simplicity of the pattern. Notice what's going on with the 10-period SMA as well. It's a great guiding hand. We're getting it through the break here. A couple of different ways to handle risk here. Lower the prior 15-minute candle, which in this case would have been right here. Nice little risk area. Topped out up here. This is your reward area up here. That's what we want. Low risk and multiples of the risk in the profit area, right? So nice clean little break from one of my bread and butter tickers today. Of course, lots of different things coming through here, but once again, it's about timing. Are we catching them at the right moment? Is the risk in place? How's it acting against this 10-period SMA here, right? 10-period SMA, man, this thing just hugged it like a coat, right? But if it ever did have a 15-minute closing candle here, probably not a bad exit, all right? Now, these are starting to warm back up again, but not as much as what we did have. But still, I'm just kind of gingerly scrolling through here. And the good thing about this window here, if you'd like to try it out, all you have to do is cruise down here to channel 4. And when you pull that up, you're going to see a bunch of windows. Those are all of mine and Steve and Andy and Sean's favorite windows. So you can find the Turbo Up family no resistance in channel 4. Now, having said that, majority of the stocks out there still being range bound in their dailies, you can still hunt this pattern. FSLR was another good example of a nice crisp range break today. Now, of course, these guys are range bound, so we kind of have to eyeball, all right, well, if we are able to find them on a nice crisp break with low risk, once again, these might not have as much oomph in them, but a nice little period up here where you could have exited for some nice profit and an acceptable risk area down here. Hey, what was going on right here when this break occurred as far as volume goes? Once again, take a peek at your single stock window, or maybe you've got relative volume built in to your ticker so you can see it. But once again, volume is not the holy grail, but it can be the great equalizer when we find a pattern that is conducive, right? So First Solar finished the day at 2.36, was high all day. This gives us the added confidence. We've got a nice crisp pattern. We've got low risk. Hey, what's happening on this 10-period SMA again? Well, all the way up here, as soon as we start getting that action below it, probably a good time to exit. So range bound, same pattern on the intraday, but we use the daily to figure out where it might peter out. And we can see First Solar, once it was up here, just at the top of these little areas back here, which are acting as supply. Let's take a look at one more that came from the regular turbo brakes. At home, all right, same song, same dance. About an hour into the open, we get the signal right here. Prior 15-minute candle, looks nice and cozy. Got a little bit of a upward move here until what happened? Until we topped out, butting up against this area right here. And of course, if you stayed in it, coming back below that 10-period simple moving average. So why do I like these patterns so much? Because of the simplicity, easy to understand where the risk is, prior 15-minute candle, and this 10-period SMA can really act as a tutor of when to get out. As long as it's staying above that line, pretty good shape. As long as we're not butting up against, you know, some massive resistance over here. But a lot of the times you'll notice the correlation. Yeah, we bumped our head here. Now we're starting to go test that SMA again. Can act as a really good exit. Now, for the longest time, I've been trying to find something interesting with NR7s. So what we're going to talk about right here is a window that I threw together today, and notice some pretty interesting correlations, once again, bringing the 10-period SMA into play on the 15-minute time frame. So coupling the NR7 alert with what we've just been talking about right here, all right? So what is the NR7 alert? It stands for narrow range. Here we're going to be using the 15-minute. Obviously, we're going to have the 15-minute intraday chart. We're going to keep that 10-period SMA on there and using the 15-minute version. Now, we've got these in, you know, the smaller time frames, the longer time frames, but 15 minutes kind of right in the middle, and that's what we're going to use today. Now, as far as my filter set goes, nothing to write home about. Not a lot of rocket science going on in here. Once again, simplicity, simple goodness. So what do I have over here? I got nothing in the min, but I do have a max of $150, $150. That way we don't have Berkshire Hathaways and just all these crazy, you know, $1,000 stocks popping through here. Capping it at 150. Average daily volume 300,000. You can take this up, you can take it down depending on your, well, depending on the type of stocks you like to find. Since we're going to be looking at these charts, we're going to be, you know, we're going to immediately see if they're liquid enough to trade or if they're conducive. Trading a lot of the time, well, most of the time, looking at symbols through any window, we're basically doing what a pro poker player would do. Fold, fold, fold. The pro poker player is waiting for those really juicy hole cards, all right? Once that ace king, once that ace queen, maybe it's pocket aces. Those are the good starting hands, but they don't come around very often. 80% of the time or more, that pro poker player is folding. Just like most of the time, we create a high quality information stream in the form of an alert window. We are going to be passing on most of the signals coming through there. Why is that? Well, all the filters are met, so we know that the stocks have the characteristics that we're looking for, but that does not mean that the timing is in play, all right? That doesn't mean the chart looks the way we want it to, all right? So, position and range. I'm looking for what could be nice consolidation, but not quite back up to the high or not at the high, all right? And we're going to be using the 15-minute NR7 to find stocks that are in this range that are NR7ing over a 15-minute period. So what I've done here, let's see, I think I got this on historical already. Yeah, let me just give it a reset real quick here for today's action. Keep in mind, if you're new, you can always pull the time column out a little bit, right? We can readjust these columns. So that way, if you actually want to see, make sure you're on the right day, because especially when you're new, you might be digging into the history and think you're looking at today, but you're not, depending on how, you know, active the alert is. So what I'm going to do is pick a spot here about 2 hours and 45 minutes into the open. Market opens at 8:30 where I am. So 10:30, it's 11:15, would be about 2 hours and 45 minutes into the open. Of course, you could go back and look at any time frame and see pretty much the same thing. But what you might notice in this history here is notice how the last batch of alerts all came out at 11. And then this batch of alerts comes through at 11:15. Then when they're done, you're going to see a batch of alerts come through at 11:30. The NR7 alerts are a little bit different because they'll all these alerts will happen at the exact same time. So you'll be sitting there when the 15-minute bar closes, boom, all these just pulse out. It basically just creates a new, updates the list, and then you can just cycle through these guys and start sizing them up. So that's exactly what I'm going to do here. We're just going to kind of click through all of these symbols coming through at this time here, and I think you're going to see what I'm talking about here. So first and foremost, AY, we get a signal right here. Of course, the high was right here. Let's notate it with a line there from that prior wick up. We get a signal right here, and we're thinking to ourselves, okay, well, if it comes over here eventually and breaks that plane, could be a good trade. What's going on with that 10 period? And we can see, even though this guy finished the day a little subpar on volume, still worked, still had a nice smooth ride up, right in that 10 period SMA. What happens down here when it cracks it? Starts to reverse. All right. Now, of course, we all know not all trades work, but the point here is that the ones that work seem to work really well, and the ones that don't work, you got plenty of time to manage your exit accordingly, right? We get long here. Yeah, we're just kind of flat up and down a little bit, plenty of time to make a decision. Do we want to continue to let this one work? If we don't, we're taking an entry somewhere around 68.36. If we're waiting for, the break below this line, what are we at? 68.30, roughly speaking. So 30 cents to, to come to the table there on one that doesn't work. All right. AEE, just marching right along here. Now, not exactly the cleanest range break, all right, because the break, it's just steadily marching up, but not excessive movement on the prior 15 minutes if we wanted to take a stab at it. What do? We get more, or what happens here? We get more upside movement, hugging that 10 period SMA like a glove. So there's so many of these signals. I'm just gonna kind of continue to scroll through here, because once again, we have one that just doesn't exactly go up, just goes sideways, another sideways mover, which when a trade doesn't work, that's the type of action that we want here, right? EXR, positive movement. Duke, another really nice one, just 10 period SMA in play all day on that one. Another one that works nicely. So, the ones that aren't working are very manageable, and the ones that are working quite well. Now, we could continue to go through all of these, and we're just going to see more of the same. More of the same. And, I was a little disappointed today at my Turbo Up family. And you might ask, well, why, Jamie? It's one of your favorite windows. Why were you disappointed? Well, because this guy right here, VNDA, didn't come through at this point in time right here. Now, ladies and gentlemen, I mean, look at that action right there. I mean, just absolutely gorgeous. My only guess is that the 1 minute volume, which is attached to this window here, was not in play at that time, and we can see the volume levels here. Now, oops, relative volume was off the hook. But hey, if this window didn't spawn it, it didn't spawn it. But look which window did peg it perfectly. This little guy right here. All right. If you're watching this window and you pulled it up right here, I mean, ladies and gentlemen, this is the cream right here.
It's pretty tight, as I would say.
The one off, I mean, just tight as a drum. And once again, 10-period SMA
You could
acting as
bounce a
that.
penny off that.
Yeah. So, I really like this window, and I'm going to drop it into the chat here. So if anybody wants to watch it tomorrow,
What's the name of that one?
it's just NR7 15 minutes. So I'm going to put this back
Also
on real
notice
time.
somebody was also asking for your pack leaders to drop as well. That would help.
Sure. Because I'm not sure if pack leaders is in the where's my chat, Steve? There it is. Okay, so let me drop this one in. And let me just make sure I'm doing the right one here. All right, the first one will be the NR7. (15-minute). And if you have not added the 10-period SMA, and I would highly recommend, we've got 15-minute NR7 here, so make sure you're watching a 15-minute chart. And if you haven't added that 10-period SMA, please do that so that you can get the full effect. Now, I don't think the pack leaders is in, well, I can't remember if it's in channel 4 or not. So I'll just drop it in the chat here, just in case. All right, now you should have both of those in there. Pack leaders and the NR7 15-minute. Of course, I accidentally put NR and, but I think everybody knows what that means. Just a great little window. Just keep in mind, these will cycle out every 15 minutes. You'll see a flurry, and then you got plenty of time just to leisurely scroll through there and look at the ones that are shaping up nicely. Pay note to that 10-period SMA, and you might get some good action off that one tomorrow. All right, looking at the time, we're right up to the button here. We got about 5 minutes left. Hope everybody enjoyed the webinar. And Scott, if you're ready to walk us out here, Scott's going to let everybody know how, if you're on the fence about becoming a Trade Ideas subscriber, how you can save a little bit of dough, and you might be thinking about upgrading to premium, and that code will do the same thing for you on an upgrade as well.
All right. Yeah, a couple items on the way out. So some of you are already grandfathered into getting Brokerage Plus. Many of you might not yet be. So if you did not get a premium subscription before November 15th, the way you can get Brokerage Plus in January and automate your trading is to go to trade-ideas.com/brokerage plus, learn the details, and just go ahead and make a deposit. The deposit is $100, and then when we release Brokerage Plus in January, then you'd be charged the remainder. The total is $1,100, and that's a lifetime license. So as long as you have a Trade Ideas premium subscription, you can access it and automate your trading. And we will be adding Holly trading, automated trading, to the Brokerage Plus platform for AI in January sometime, or at least first quarter as well. We will be releasing the first wave of Brokerage Plus in January. So get on board that. There's only 1,000 deposits available for the first wave as we ramp up our capacity to auto trade. So check that out. Learn the details at trade-ideas.com/brokerage plus. There's a great ebook out. We released it earlier in the year, and it has been very timely for the markets we've been seeing. Trade-ideas.com/ebook. It's got 5 chapters, each one with a strategy and how to trade a post-BTFD market. Both Jamie and Steve contributed chapters. So, if you don't have it yet, just get it. It's a great little PDF to keep on your computer or your tablet reference, and learn those strategies. They can be lifesavers for you. Also, new podcast came out on Friday. If you don't already have a subscription to our podcast, just search for Trade Ideas Podcast in the podcatcher that you use to listen to podcasts in, and add us as a subscription. Then you can always get the newest episode. And also, you can scroll through the previous episodes. We sometimes have special guests on, and that can be very insightful as well. We got a code that'll save you some cash if you decide to become a subscriber today or do an upgrade. Office Holly is what's good this month for this webinar's code. 15% off the first month or year of Trade Ideas, and you can also use that off your first month or year of an upgrade. So don't sleep on it. Go ahead and take advantage of it. The sooner you get going, the sooner you can, use the new features that we have. Any questions, shoot an email to info@trade-ideas.com. And that's the best place to send all your questions because it goes into our help desk software where we route it to the appropriate team member for you to get the answer from. You can also follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also have at Trade Ideas. Facebook.com/Trade Ideas Pro is the page we have on Facebook. So if you like that page, you'll see updates on there, sometimes different stuff than what we put out elsewhere, and then you can share that stuff with your friends. Thanks, everyone. Have a good day. We will have the recording up later on tonight or tomorrow. Thanks, Steve and Jamie.
All right. Bye-bye. See you.
Yep. Thanks, everybody. See you tomorrow. Bye-bye.